Testing one, two. Let's see. Let's see if we streaming over here on Facebook. I think we streaming over here on Facebook as well. Let's see. All right. Set up over here. Let's see. All right. Let's see. Copy. Let's go live. Yeah, we should be live. We should be live. All right. What's going on, everybody? Yeah, we should be live. Let's get everything right on my end, making sure everything is working properly. I'm excited. I'm excited. I'm excited. Let me make sure. Let me look at what's going on over here on Facebook. Okay, we got viewers over here. What's going on Facebook? I hope everybody doing amazing. I want to make sure I be able to share my screen. Definitely going to make sure I can share my screen. We got 3 viewers. What's going on, man? I want to welcome everybody to the Don't Overthink Entrepreneurship and Real Estate Podcast. This is the Multifamily Bootcamp Day 1. I am your host, Dominique Williams, man. I'm super excited to be here to present to you guys, to talk to you guys, to have a conversation about what I've been doing over the past year, investing into multifamily real estate, and I am here to drop the gems. So I want to make sure I be able to share my screen. Um, that way that we'll be able to dive into the presentation. Let me make sure everything is working properly over here. Okay, 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 okay. Um, if you can see me, let me know. Okay, we good. Okay, we working over there. All right, so I'm gonna go back. I'm gonna share my screen and I'm gonna get started. And yeah, we're gonna get started, guys. We're gonna get started. We're gonna get started. Okay, so we should be sharing on my Riverside platform as well. Okay, let me put that up there. So y'all should be able to see everything that I'm doing. And we're going to get started with the presentation. Just a little bit about myself. For those that don't know and those that do know, my name is Dominic Williams, aka Mr. Back to the Money, guys. I've been in the music industry over 20 plus years, um, hosting events all over North Carolina, all over Virginia, being able to help a lot of people have a good time. Those that know me, I have some great hits in the music industry. I've been doing it, like I said, for over 20 plus years, educating people, showing them how to have a good time, showing them how to put out great music over time. And that's what we do. But in that, I've learned a lot about marketing. I learned a lot about branding. I learned a lot about promotion with the help of my mentors that's been able to help me to put my music out there amongst a lot of people. It's really a large learning curve to learning about branding, learning about marketing. It's truly been a gift from God. I've been performing in front of the microphone since I was a baby. I literally got videos as a kid performing. So, what I've been doing over the last 4 years, guys, I was introduced to network marketing. I was introduced to day trading, learning how to invest into foreign exchange, cryptocurrency, helping others to be able to invest. And over that span, not all at one time, but over that span, I've been able to help multiple hundreds of people, of investors, to actually invest into cryptocurrency and day trading. And learning that skill set, I naturally gravitated to capital raising and helping investors to get great returns by investing into multifamily real estate. So that's what I do now, guys. I focus on real estate space. I focus on helping investors to get their money out of the stock market, out of mutual funds, CDs, even crypto. Crypto is definitely a good market, but it's really high and volatile. So I want to be able to help investors to put their money into safer assets that will allow them to grow their capital. So tonight's presentation is to really to help and educate you guys on what is multifamily, why multifamily, and that's what we're gonna do. So I'm gonna go ahead on and go through it. That's a little enough about me. Like I said, you will have this recorded, and I will be putting it out and sending it out in an email. And also, if you missed this recording, if you drop your email in the chat, I'll make sure that it gets sent to you, just in case any of you guys come in late and get to watch this. You'll actually be able to see this presentation I send it out through email. So why commercial real estate? Why multifamily? Number one, it's a real asset. I stay in a beautiful apartment, A-class apartment. It's something that I can see. It's something that I can feel. It's something that I can touch. This is a real asset. I don't take anything from day trading. I don't take anything for trading in the foreign exchange market. I've made a lot of money in those markets. And the thing about it is I couldn't actually see the asset. With real estate, you can actually see the asset. We can actually add value to these assets. So commercial real estate is less volatile than stock market, than bonds, and it gives consistent cash flow, real appreciation. Appreciation meaning over time the asset is going to gain more value and more equity into the asset, and we're able to capitalize off that. We're able to help you, the investor, to get great returns off that. So imagine investing your money into something and it continues to grow over time. No other asset classes build more wealth than real estate. Real estate is the number one investment that has built wealth for so many other people. And this is why I choose multifamily real estate. Like I said, it's a real asset. It's a real asset. It provides cash flow. It appreciates over time. And the residents, such as myself, I pay my rent every month. So the residents is the ones that's actually paying down the purchase of the asset. And we say asset for those that once you get, you're going to learn a lot of these terminologies. Asset is the actual apartment building that we're investing into. That's what we just call them assets because they are indeed assets. So we can leverage these assets and pay these things down over time, and we don't actually the ones not paying it off. The actual renter, our residents, is the ones actually paying it down. This is why I choose multifamily. And another thing, tax benefits. Guys, I've seen so many people literally have small tax bills just because they're able to invest into multifamily real estate. Literally that simple. Even though the asset appreciates over time, you get something that's called tax depreciation, and pretty much you can actually write off uh, a loss in the asset and offset your returns and be able to get great returns, and to take that money that you was getting to Uncle Sam and to the government and reinvest it into another asset to continue to grow and build wealth. So that's what we'll do. This is why I choose multifamily. This is why you see me all online talking about what I'm doing, why I'm working with these investors, why I'm working with my mentors, other partners, and other educational partners that's doing the business. I only work with experienced operators, such as my mentors, got thousands of doors. And what I do is I find investors such as you to be able to come in and partner with us on safe assets where you can actually grow, build wealth, and to get the time freedom that you deserve. So this is why I choose multifamily real estate. Why should you invest with us? High rates of returns, then found in typical investment vehicles, like what I was just explaining to you. The reason you can get higher returns, safer than the stock market, mutual funds, CDs, all of that good stuff. You can literally invest into an asset that you can see. Imagine you investing into an apartment building that you can ride by and you can literally see what's your investment. And what my team does, we go in and stabilize. Stabilize mean go in and fix the asset up. I know you have went and seen apartment buildings that need some work, that need some type of help, that you might go in, the parking lot is messed up. We'll go in and repave it, because what's happening is we're looking for assets, and the investments that we look for are value add assets. That means that we're going to look for assets that we can go in and add some type of value to it, fix it up, make it pretty, make it for our investors to be excited about. And those are the type of investments that, we look for. So we can go in, let's say we find an apartment complex, and we're going to talk about finding deals as well here tonight. I'm not going to hold you guys long. I like to keep things short, straight to the point. That's why my brand is called Don't Overthink Entrepreneurship and Real Estate. I want you to get it. I don't want to give you a long, written out something that just might go over your head. I want to keep it short, impactful, to help you guys to go take action, to work alongside of us so we can find some deals and really capitalize in 2023. So, like I was saying, I almost lost my train of thought. Like I was saying, let's say that we found an apartment building that needs some work. It's just like houses. Like, from people that's seen on a single family house, you go get a house that might need some paint. We're gonna do the same thing to the apartment building. We're gonna go redo the parking lots. Let's say it doesn't have a playground in there. We might add a playground for the kids so kids can have somewhere to play. That right there alone will make a resident want to stay. Well, oh, we got a nice playground. Let's say that it didn't have that before. These are things that we go and add value to the asset, make it pretty, make it livable. Let's say that it doesn't have a dog park. We might go in and add a dog park to that asset so that you can go have somewhere to play with your dog. Where a lot of us love our fur babies, and you got a place where in the apartment complex you can literally go there and play with your animals. So these are the things and some of the value that we add to our assets so we can actually bring up the rent to market rent and be able to get great returns. Like I said, the residents are the ones that pay down the mortgage or the purchase of the asset. So like I said, why should you invest with us? No long-term contracts, meaning the hold on each of our assets are usually 3 to 5 years, sometimes 5 to 7 years. So this is for somebody that want to get income, want to get passive income year over year by investing with us, but there's no long-term contracts that's going to have you in this thing for the rest of your life. Once we get you your return on your investment and also get the returns, you can literally take your money and do whatever it is that you want to, or you can reinvest with us and get into other assets that we have coming, because our goal is to at least bring in a deal every quarter. So we're looking for safe assets. We're looking for ones where it really pencils out, where the numbers really make sense, that we can actually invest into. So you don't have to worry about no long term contracts when it comes to your investors. And let's say that you are buying these assets, and these are the things that you will learn as you go. Most of the whole time for us to get our investors returns is 3 to 5 years. You can also IRA and 401ks. A lot of you guys have IRAs and y'all got 401k accounts. We literally work with other companies to show you how to self-direct those, your IRA and 401ks. And self-direct pretty much means you'll be able to invest it into other assets such as real estate and direct it to um, um, the asset that you want to get in. So you can use your 401ks to invest with us into our assets. Diversify from the stock market and mutual funds. Like I said, we are looking to get you guys out of the stock market and into a safer asset. Right now, we know the stock market is bleeding. We know that a lot of people has lost money in the stock market. But with real estate, guess what's booming? Rents are still going up. People still gotta have somewhere to stay. That's why we invest in the multifamily. That's why we are really diving into this asset class. That's why I love what we do. This is real ownership. You get a real slice of the pie. You get real passive income. So this is why multifamily. This is why you should invest with us. This is why you should be investing into multifamily. Where are you currently investing? Like I said, these are the places, and this is where a lot of you guys already got your funds at. This is where a lot of you guys already investing in CDs, money markets, safe but low rates of return. Ties up your investment dollars. You got money in the stock market, different commodities, other mutual funds, potentially high rates, but they're more risk. Guys, I've lost a lot of money in investing into crypto and other assets, and don't get me wrong, I still invest into day trading. I trade every week. But I also take my money. The object is, if you're investing into these stocks and investing into trading and crypto, the object is to take your funds out of those markets and put it into a safer asset, which is right here, our real estate program. And that's why we're investing into multifamily. This is why you want to be the person to literally take that investment and go to the next level, where you can sleep well at night. You ain't got to be looking at your phone, because there's been plenty of times I'm looking at my phone going crazy, like, oh, is my trade going to turn around? Or what is the crypto market doing? It's crashing. Bitcoin is here. Boom, boom. With real estate, you can sleep good at night, because guess what? People got to have somewhere to stay. It is recession proof. We're being able to reap all of the tax benefits. Yes, inflation is high. Guess what? Rent's still going up. People still got to have somewhere to stay. We're still adding value to assets. This real estate is not going anywhere. This is an asset class that you do not have to worry about going anywhere. This is why it is good to be able to invest into real estate. So these, like I said, are some of the assets that you guys probably are familiar with. These are some of the things that you already invested into. That, like I said, they might got low returns or got high returns but high risk. And we choose real estate to give you high returns and low risk. No other place that you can do that. So we talked about why real estate, why multifamily. Now let's talk about how to find your first deal. Now I'm the way that I'm breaking this thing down is for you to be the person to either invest passively or to be able to invest actively. So everything that I just went over is for the passive investor and it's for the active investor. So if you want to be able to go out and find your first deal, or if you want to invest alongside of me, you don't want to have to deal with termites and toilets. You don't want to have to lift no screwdrivers or any of that and allow that to me. You can invest passively with our team. But let's say that you're that person that want to buy your own property. These are the things that we look for. We look for job growth number one. That is the number one thing that we're looking for. And not only job growth, we're looking for population growth. Usually the assets that I'm looking for assets, like I focus here in the Charlotte market. I focus in Charlotte, North Carolina. I focus in Greensboro, North Carolina. I focus in Raleigh, North Carolina, and I also focus in Wilmington, North Carolina. And I focus on the surrounding areas of those, and these are growing places. So reason why I invested it, because already we know that it's over 100K in population growth. We know that the job growth is in high demand in Charlotte, in Greensboro, A&T. We got A&T right there. Wilmington, we got the beach right there, Atlantic Beach. Everybody loves to go to the beach. We got a Raleigh, which is our capital. It's so much job growth there. We got household growth, and household growth is the type of income that's coming in. We got a lot of jobs. If we got a lot of jobs, we know we got some money coming in. So we're looking for the appealing lifestyle, low cost of living, high potential of renters versus homeowners. That's what we look for. We're looking for more renters than homeowners. So in those areas, like the city, most people are looking to get a nice apartment where they ain't got to worry about a lot of the maintenance stuff. They just let the people that they're renting from deal with the maintenance. If you know, if something happened to the microwave, they come in and fix the microwave. You ain't got to go to Walmart and fix the microwave. So when you're looking for a property, when you're looking for a market to invest in, this is what you want to look for. You want to look for job growth, household growth, an appealing lifestyle, lower cost of living, high potential of renters versus homeowners. That's what you look for when finding the market. The next thing you want to do, you want to pick you. Now, my mentor, Mr. Rod Cleef, always said, you want to find four markets. But what I'm going to tell you is just like me, I focus on North Carolina. I'm not all in a whole bunch of other states. Although I want to be able to be in other states, I want to focus on where I'm good at. I want to focus on mastering my market. So I'm not going to tell you guys to go and find four different markets. You want to look, number one, in your backyard. That means where you stay at. I'm in the Charlotte market, so I'm focusing on the Charlotte market. I'm focusing on here. I want to be a master. I want to be able to build the relationships with the brokers. I want to know, where's the best places to stay in Charlotte. I want to know, what is the cap rate and stuff like that, which I'm not going to get deep into today because I don't want to have you guys overthinking things. That's the whole point of my brand. Don't overthink multifamily. You're going to learn this stuff as you go, as you partner, as you find a mentor, as you find someone that's already done the business. These are the things that you're going to look for. So, like I said, number one, you want to look in your backyard, where you're staying at currently, a place that you know, place that that you've been at all your life. The next place is the next market that'll be good for you guys to find is places that you love to visit. Where's somewhere that you love to visit that you always visit? Like me, like if I'm not in North Carolina, I go to Georgia, like Atlanta. I love Atlanta. Atlanta is a booming market. I've been to Atlanta so many times. So if that's a place that I love to visit, so that'll be a place that I will also invest in. So first we got your backyard, then we got the place that you like to visit. Then the next place is, let's say it's somewhere that you like to go on vacation to. Where's where I love to go on vacation? I like to go to Florida. I like to go to Texas. Well, we're gonna hold Texas because I'm gonna tell you, Texas is my fourth, would be my fourth one. But let's say the place that we want to visit. I like to go to visit in Florida. I like to go visit in New York, which I don't invest in New York. New York is considered a blue state. It's really not landlord friendly, and we invest in landlord friendly states. But let's say I go to Florida. That's somewhere that I love to visit. So that'll be somewhere that I will invest in. I will buy apartments in somewhere I like to visit. Your fourth market that you're gonna pick is somewhere that you could see yourself moving to, settling down. You and your family. You say, hey, this is the place that I'm not going anywhere else. That place for me would be Texas. Dallas, Texas. That's somewhere I can see myself moving to. Dallas or Houston. That's another place, one of the markets that I'm going to eventually go into. So as you can see, I have 4 markets, but I'm only right now focusing on 1 or 2 markets where I can literally just be the expert in. Like I said, such as Charlotte. I just focus on the North Carolina market right now. I have partners that's in Georgia. That's fine, but I focus on those markets. So finding the right markets is key. Finding where you want to invest at is key. So let's go to the next slide. Finding the right property. These are the type of properties that I look for. Of course, not this picture. I'm gonna get my team to change out this picture and get a little bit better multifamily asset for this. But we look for value add properties, as I was speaking earlier. I'm looking for B and C assets. Now there are 4 asset class. You have A assets, you have B assets, you have C assets, and you have D assets. I'm gonna start with D assets. D assets is the assets that's beat up. I mean, might be boarded up. Windows, if it's not, they might not be they might not be fully occupied. It might be less than 50% occupied. It might be drug area. It might be with violence at. It might be these are the properties that a lot of people don't want to invest in. We got people that do love these type of assets, but that's really not my choice of assets. I like something that's safe for my renters to be able to stay in, my residents to come to and be safe. So I don't focus on D assets. The next asset is C assets. C assets, I kind of like C assets. That means they're not in the hood, but I can add some type of value to them to bring them up to a B or A plus asset. So let's say that I find me a C asset. Let's just say that this asset right here on the screen is a C asset. We'll go in and we'll touch those bricks up. We'll go in and fix the window, put all up to date windows in the asset. We'll redo the roof, get it looking all pretty. Go do some new landscaping. Might put some pavement down. And this is just like I said as an example. I'm definitely gonna have my team to update this picture. But I'm just showing you the things that we will look. This would consider, let's say this would be a C asset. And we'll go in and renovate. We'll go in and do it on the inside. We'll put hardwood floors, granite countertops. And what most renters look for when they're looking for a multifamily asset, especially women, they're going to look at how good the kitchen look and how good the bathroom look. Those are the 2 most important places for renters to look. They want to know, my kitchen look. The kitchen is beautiful. The bathroom is beautiful. So those are the things that we spend most of our time looking at and repairing and making sure that we got those things A1. Like I said, we're gonna usually, if there's carpet in there, we're gonna probably go in and do hardwood flooring, granite countertops, and things like that. So those are what we're gonna do with the C asset. The B assets are nice assets, nice neighborhoods. It's still room for us to go in and improve it. It may not be in the best neighborhood, but it's still nice. You can feel safe. You can see that okay, it's nice parking lot. It might have a dog park. It might have something where you can go play with the kids. It can, but it may not. So the goal is to take that B asset and turn it to an A asset, such as the asset that I stay in now. I stay in a really nice apartment complex. I mean, it got the dog parks. It got big swimming pools, amazing gym. That's another thing that we're looking to add. A nice gym to it. Really nice parking spots. We got the dog park. We got valet trash. These are the things that we like to do when it comes to the asset. Then you got the A assets. Like I said, this is considered an A asset. I mean, top of the line, valet trashing, dog park, big swimming pool where you can go out and cook on the grill. Everything is on site staffing to help you 24/7 if something go wrong. These are the type of assets that we like. But like I said, as you can see on my screen, these are the assets that I focus on, B and C assets, because I want to be able to add value to the component. I don't want to go get a brand new A asset because it's not much value there that I can add to help us to get better returns for our investors and my team as well. So, like I said, we're looking for B and C assets that we can add some type of value to, and we're looking for not only the asset to be that, we're looking for B and C areas to or B and A areas to actually to build an asset. So let's say we found a C asset that's in an A area. That's a plus. We know that we're going to be able to get great returns. The market rents might not be where it need to be. We're going to be able to come in and add value to that and bring that up to stabilization in those assets, in those A areas, in those B areas. A good property with great potential, great equity for rapid and large gains. That is the key. That's what it look like when we find the right properties. These are the type of properties that you want to look for. You want to look for the properties that you can add value to give you all of this right here. Finding the right owner. How do you find these assets? Boom. These are some of the stuff that you look for. So when I was focused on, and this is something that me and my team is actually doing right now, we're going direct to seller. We're looking from 20 to 100 units. And we are going direct to seller. So those that know that I started on the single family side, I was wholesaling deals. So we're going back with the same model now to find owners. We are doing cold calling. So what we do, we got a dialer. Our partners are going to be calling directly to the sellers. And these are some of the type of sellers that we're looking for that can potentially sell their property to me. Absentee landlord. What that means is that might be, let's say that I'm looking at an asset that's in Charlotte, but the owner stays in New York. That's potential person they want to sell. They might don't want to deal with the asset anymore that's in Charlotte. They might want to sell it. So that's considered an absentee landlord, someone that has a property that's out of state and they don't stay in that state. A tied owner. So when we look for tied owners, what do? When we search for that criteria, we're searching for someone that's owned a property over 20 years. 10 plus 15, 20 years, they might be tired of it. They're considered a tired landlord. They don't want to deal with it anymore. These are the potential owners that we're looking for to be able to go and purchase their asset. And that's what I love. These are the type of sellers that we like to look for. We like to look for sellers that, that potentially is ready to get rid of the asset. They might have multiple doors. They might have 1,000 doors. They might want to sell a couple of their apartment complexes. So what we do is we cold call them. We send out direct mail. That's another thing that you can do. Send out letters to the owners. Say, hey, we've seen your asset over there on 123 Main Street. We just want to know, would you be interested in selling it? Boom. Let's say that they do get back with you. They say, well, we thought about it. What happens is you get them on a phone call. Then you can start talking about the asset. First, when you're talking to a seller, you always want to build a relationship with the seller. You don't want to just jump slam in to about their property, because you're buying something for someone that is their property is probably dear to them. It means a lot to them. So therefore, you want to be able to make sure that everything okay. I just want to make sure that live and stuff is still working. Let's say that you want to build like genuine relationships with that person, because you're gonna be buying that property from them. You want to stay in front of them. You want to be able to nurture that lead. So with us cold calling and sending out mail, they're going to our database, which we use a CRM, a commercial. I said commercial. It's a customer. A customer. I said CRM. I can't even think right now. So the CRM is pretty much just keeps up with your leads and keeps up with your potential clients, your potential sellers, the people that you're buying these properties from. Therefore, you can put in notes. If you have a conversation with them today, you can keep the recordings of the calls so that you can always stay in touch with them. You might have some type of email automations to be able to send out to them to stay in touch. And we're going to talk about that tomorrow. I'm going to talk about social media and how to use emails, automations, all of that stuff. We're going to talk about that tomorrow night. But these are some of the ways that you can actually find the owners through cold calling, like I said, through direct mail, and also you can reach out to them through email. You can even do driving for dollars. That's what I used to do. Driving for dollars is you get in your car and drive in the city that you want to invest in, and look for these properties. Write down the address. Then you can go in and skip trace the address. Skip trace means you can get the phone numbers and the LLC and get all of their contact information so that you could be able to get in contact with the owner. So that's how you find deals, guys. Like I said, I'm not gonna hold you a lot tonight. You've learned a lot tonight. You've been able to see how you can literally find your first deal, where to find your first deal, why multifamily. These are some good things to actually know. Let me turn the full screen off. Let me go back over here to Facebook and see what we're doing over here on Facebook. Let me stop sharing so I can talk to you guys. But this is definitely, like I said, okay, we still got viewers on. But yeah, this is some of the stuff that we love to do, guys. Like I'm excited. I love the space. I love being able to help other investors learn about multifamily, learn about real estate. I'm partnered with some of the best in the world when it comes to investing into multifamily real estate. My partners, they own thousands of doors. I help investors to invest into the assets that we bring. We actually put in an LOI today for 120 units. So I'm excited, man. I'm excited. I got some of my partners now. I can see I had my screen. I had my screen sharing, so I couldn't see you guys. But now I see. Look, my man Adam been killing it. We got to get on a call this week, Adam. I haven't been able to meet you, man, but I've been seeing a lot of stuff that you're doing in the group, man, and I'm excited, man, for what everybody's doing and what we're doing, man, in the multifamily space. Like I said, partner with investors, and guys, I appreciate you guys for coming tonight. Tomorrow night we going over marketing and branding, how to attract investors, how to get the money to fund your deals. So I know you was wondering, like, man, let me get off this thing. I can't buy $1 million asset. No, guys, guess what? We're going to show you how to raise capital from investors to invest into your multifamily deals. We're going to show you how to get on social media and attract more investors to what you're doing so that they'll be able to invest and grow with you. I'm excited. This is day one. I'm ready to see you guys tomorrow. Like I said, just drop your emails if you want to be able to get the recording to this. We're going to be having it edited. You might get it next week sometime. But if you just came on and you want the presentation for this, drop your email so that I can make sure that you get this recording and get the presentation of some of the things that we working with. And yeah, looking forward to seeing you guys tomorrow night, 9 p.m. Eastern Standard Time. I am launching my new website this week. As you guys know, I have a branding business, Brand Me Up. We work and help you guys build your brand. We put in capital raising systems, automations, things to help you to grow your business, high-end websites. You can go to harvestseasoninvestmentgroup.com and look at my current website. And I want you to look at the before, because at the end of the week, you're going to be able to see the after and what me and my team is providing for you guys to go to the next level, to build your business and really win at this thing. So it was great to be with you guys tonight. I thank you guys for coming. See you guys tomorrow night right here at 9 p.m. Eastern Standard Time. And let's go. Have an amazing night.